Ever heard of a ceramic tougher than steel that can kill bacteria?
No way. Really?
Yeah. Get ready to dive into Sintx Technologies. They're using silicon nitride to change healthcare, aerospace, you name it.
Sounds pretty sci-fi.
It does. And we've got company analyses, market trends, even a SWOT analysis, all to give you the inside track on SINTs.
So we're not just talking about some material, right?
Yeah.
Sintx has been a leader in this since 1996.
Right.
They have 17 patents and 84 more pending.
That's Sintx Technologies, not messing around. They have a 30,000 square foot facility. They handle everything from start to finish.
Oh, wow. So they control the whole process.
Exactly.
That's smart. Vertical integration, they can control quality and prototype new stuff quickly.
Like a chef who grows their own veggies. Right?
Yeah. Full control, faster experiments, that's the advantage. They actually have the only FDA-registered silicon nitride medical device facility in the world.
No kidding.
Yeah. So that's how they set themselves apart. But what are they actually making with this stuff? What really stood out to you? The spinal implants are amazing. Implants that help bone grow and fight infection.
So two birds, one stone.
Exactly. Usually you'd need multiple procedures for that.
So less invasive, faster healing. That's huge, especially these days.
Definitely. And it doesn't stop there. They're making biocompatible dental implants, too.
Really?
And wound dressings that are naturally antibacterial. Imagine a bandage that helps your wound heal and prevents infection.
Now that is sci-fi.
Right.
But it sounds like silicon nitride has way more uses than just medical, right?
Oh, yeah. Their industrial-grade silicon nitride, STX 100, is used in aerospace, cars, energy. We're talking about lighter, stronger parts that can withstand anything.
I'm picturing Iron Man right now.
Me too.
Ah.
So they have the tech and tons of uses, but what about the people running the show?
Yeah. What about the team at Sintx?
Well, we've got Eric Olson as CEO and Ryan Bach as CTO. Olson has over 30 years in medical devices. He even took a company public. Bach has been in silicon nitride R&D for over 20 years.
Wow. So we've got a seasoned CEO and a tech whiz who's been obsessed with this stuff for decades. That's a powerful combo. But I heard there have been some changes in management lately.
Yeah, the current team is pretty new. Average tenure is short. Could mean they're in transition, adapting, looking for new opportunities.
Makes sense. New blood, new energy. What kind of moves have they made?
Well, they decided to get out of the armor business, which is a big one.
Really?
Yeah. Shows they're laser focused on medical devices, even if it means letting go of other profitable stuff.
Interesting.
They've also been cutting costs.
Okay.
Launched a stock repurchase program and are actively looking at partnerships, acquisitions, the whole deal.
Wow, they are not sitting still.
That's right.
Sounds like they're setting themselves up for some serious growth. But all of this makes me wonder, what does their financial picture actually look like?
Ah, yes, the nitty-gritty. Let's break down their key numbers and see what story they tell.
So we're back, ready to dig into the financials. Give us the download. What are we looking at here?
All right, so first things first. Sintx Technologies is what's called a microcap company.
Microcap.
Meaning their total value on the stock market is pretty small, like $3.78 million.
So small company, big dreams, that's not always a bad thing, is it?
Not at all. Plenty of big companies started small. But it does mean we have to be careful when we look at their financials. Their revenue last year was $3.25 million, and their gross margin was 66.06%.
Okay, remind me again, gross margin is?
It's basically the profit they make on each dollar of sales after paying for the stuff they need to make their products.
Okay, got it. So they're making a decent profit on each sale. That sounds promising.
It is, but here's where it gets a little tricky. Their net income is negative, and their free cash flow is negative too.
Uh-oh. Not good. What's going on there?
Well, developing this kind of tech takes a lot of money. Research, clinical trials, expanding their facilities. It all adds up.
So it's expensive to be cutting edge.
It is, and they're still pretty early in the game when it comes to selling a lot of their products, so the sales haven't caught up with the expenses yet.
It's like they're planting seeds, but they haven't grown into money trees yet.
Exactly, and that's where the return on invested capital comes in.
Which is?
Negative, too. Basically means they're not making money yet on the money they're investing.
Okay, so some warning signs there for sure. But there are reasons behind it. Let's not panic just yet. What about their debt? Are they drowning in loans?
Thankfully, no. Their debt-to-equity ratio is only 2.4%.
2.4%.
Yeah. For every dollar of their own money in the company, they only owe about 2.4 cents to lenders. So they're not over-leveraged. Gives them room to breathe.
Okay, that's good. What about their short-term stuff? Do they have enough cash on hand to pay the bills?
Their liquidity ratios look good, actually. Both their current ratio and quick ratio are healthy, meaning they've got enough assets to cover their short-term stuff.
So they're not swimming in cash, but they're not about to sink either. Kind of a mixed bag so far. Some worries, some good signs. What's your take on their financial health overall?
I'd say they're in a sensitive phase, investing a lot in their future, which means losses now. But if their bets pay off and these new products take off, their finances could change big time. It's a risky situation, but also high reward.
A gamble. So what do the Wall Street analysts think about all this? Do they see potential, or are they running for the hills?
Well, this is where it gets interesting. The average analyst price target for Sintx is $71.40.
Wait, $71.40, but their stock prices.
Way lower, yeah. Which means the analysts think there's huge potential for growth.
Big difference. What are they basing that on? Are they seeing something we're missing?
Probably looking past the current numbers and focusing on the long term. Betting on silicon nitride, the leadership, and their place in these growing markets.
So betting on the future, huh?
Pretty much. But analyst predictions aren't guarantees, of course. They can be wrong. A lot of things can influence them.
Right. Got to be realistic. We're talking about a company that hasn't really proven itself financially yet.
Exactly.
Cautious optimism then, but also some real concerns. Makes you wonder, who's actually investing in this company? Big institutions or regular people like us?
Let's see. Let's look at who owns Sintx and what that tells us.
Okay, so we've talked about what Sintx does, who's running the show, and what their books look like. It's a mixed bag for sure. Now I'm curious who actually owns this company. Are we talking big investment firms or everyday folks?
That's a key question. It tells you about influence and who's got skin in the game. Turns out institutional investors only own about 18.38% of Sintx.
So not exactly Wall Street's favorite yet.
Not really. And insider ownership is even less, like 1%. So most of the shares are held by individual investors.
That can make the stock jump around a bit more, can it?
It can, but it also means there's room for a big investor to come in and make a splash.
All right, so a little unpredictable there. Let's switch gears now. We've talked about Sintx good and bad points, but let's really assess the risks here. Let's use that SWOT framework. What jumps out as Sintx's biggest strengths?
Their silicon nitride expertise, that's huge. Been at it for decades, got the patents, the tech manage. Nobody else does it quite like them, gives them a real advantage, especially for medical devices. And even though the management's new, they've made some bold moves, streamlined things, focused on growth that takes guts.
Strong foundation, experienced leaders, even if they're fresh faces. What about the other side? Where's Sintx vulnerable?
Well, we can't ignore the financials. Those losses, the negative cash flow, definitely a weakness. And they haven't really captured a big chunk of the market yet. Makes it tough to go up against those bigger established companies.
David versus Goliath situation.
Kind of, yeah. But every underdog has a shot. So what opportunities are out there for Sintx?
Yeah, what could really make them take off?
Emerging markets, huge potential there. As healthcare spending goes up in developing countries, they'll need more innovative devices. That's where Sintx shines. And partnerships, that could be a game changer. What if they team up with a big name in, say, orthopedics? They'd have the resources to really grow.
Finding the right allies to help them level up, basically.
Yeah.
But even with all that, there are always downsides. What threats should we be keeping an eye on?
Medical devices, it's a tough industry.
Yeah.
FDA approval, that stuff takes forever and costs a fortune, and technology changes fast, right? What if someone comes up with something even better than silicon nitride? Plus, you've always got those big companies breathing down your neck, lots of money, big brands are always a threat.
So it sounds like Sintx is on this tightrope. Huge potential, but also some serious risks. They've got the tech, the leadership, the markets there, but those financials and the competition, those are real hurdles. What's the takeaway here? What are we thinking?
Sintx Technologies is a perfect example of a company at a crossroads. If the silicon nitride really is revolutionary, and if Sintx can get past those money problems, watch out. They could shake up a lot of industries. But it's risky. High risk, high reward, like we said.
Yeah, no easy answers. It's a gamble, but maybe a really good one. What do you think, listeners? Would you take a chance on SINT Technologies? Jump into the comments and let us know. And while you're at it, share your own stock suggestions. We're always looking for new companies to deep dive into.
You got it. And if you're into companies like Sintx pushing the limits with tech and innovation, make sure you subscribe. We'll keep bringing you those deep dives and market insights every time.
Don't forget to check out the Stock Analytics AI YouTube channel too. Tons of videos, resources, all to help you become a better investor.
One last thing, everyone. This deep dive is just for information, not financial advice. The research, the AI we use, it's all constantly changing. Do your own research before making any investment decisions.
Absolutely, that's crucial. All right. Until next time, keep learning, stay curious, and happy investing.